Bitcoin was created in 2009, and it has been around for more than 10 years now. Its price has gone from nearly zero to over tens of thousands of dollars, multiplying thousands of times. Such growth is almost unprecedented in financial history. But the question is, why do legendary investors like Warren Buffett keep speaking out against Bitcoin, even calling it rat poison? On the other hand, many people are rushing to embrace it, calling it digital gold, and treating it as one of the most important assets of the future. Today, we're going to analyze Bitcoin from the perspective of value logic to figure out what it really is, where its value lies, and where it might be heading. If you want to understand Bitcoin, the best comparison is gold. Gold and Bitcoin share several similarities. First, they are both non-yielding assets. What does that mean? It means they don't generate cash flow. Unlike stocks, gold doesn't pay dividends, and unlike bonds, it doesn't pay interest. When you hold them, you're essentially betting that someone else will buy them from you later at a higher price. Second, both are seen as tools for hedging against inflation. Gold is considered an inflation hedge because its supply is limited and annual new supply is relatively stable. Bitcoin takes this idea even further. Its total supply is locked by code at 21 million coins. In theory, it is even scarcer than gold. This is why institutions like MicroStrategy also treat Bitcoin as an inflation hedge and include it in their asset allocation. But the differences between the two are also huge. Let's first look back at where gold's value comes from. In our last video, we said that gold's price is mainly driven by demand. From this chart, you can see that jewelry and industrial demand account for more than half of gold's demand. In other words, more than half of gold's value comes from real-world utility, with the rest driven by investment and store of value demand. That means even if no one speculates on gold, it still has solid practical uses. But what about Bitcoin? According to a report published by the Bank for International Settlements in May, Bitcoin's biggest problem is that it has almost no practical use. Data in the paper shows that most Bitcoin transactions are unrelated to payments or cross-border transfers and are instead driven by investment and speculation. In other words, most people buy Bitcoin not to spend it, but purely in the hope of selling it at a higher price later. What's more, the report points out that even in Bitcoin's limited application scenarios, such as payments and transfers, its role is increasingly being replaced by stablecoins. Data shows that stablecoins are rapidly growing in overall crypto transactions, while Bitcoin's share of payments keeps declining. This is because stablecoins are pegged to fiat currencies like the US dollar, making them less volatile and more suitable for payments. So from this comparison, we can see that while both gold and Bitcoin rely on scarcity to build value, gold's status comes from thousands of years of historical consensus, while Bitcoin has been around for barely more than a decade. Its recognition is far from stable. You can also see this gap from market value. Gold's total market cap is over $25 trillion, while Bitcoin's is less than $2 trillion. The difference is still massive. This means that if Bitcoin truly wants to become a safe haven asset like gold, it will need a much longer time, maybe even decades of testing. More importantly, at least half of gold's value comes from practical uses like jewelry and industry, while Bitcoin has almost none. Its price relies almost entirely on consensus, the belief that it is valuable and will become even more valuable. This naturally reminds us of the tulip mania in the 17th century. Back then, a single rare tulip bulb could sell for the price of a mansion in Amsterdam. People kept buying, convinced the price would go higher, until one day it all collapsed overnight, leaving many ruined. It was a classic case of speculative frenzy, showing how human greed and herd mentality can create absurd illusions of value. And today, is Bitcoin really that different? If we dig deeper, we see that finance is essentially a symbolic order. It doesn't provide physical value, but rather a shared belief. I believe in what you believe in. We often say value is invisible, but finance provides a stage for humans to capture imagination through prices. The larger the consensus, the more solid the value appears. Bitcoin is the purest reflection of this symbolic order. It has no cash flow, no practical use, yet it carries immense wealth simply because enough people believe it will be worth more. In this sense, Bitcoin may be the most naked and honest presence in today's world. It strips away all the ideological disguises and directly reflects the essence of human greed and desire. It openly tells us, consensus itself is value, even if that consensus is fragile. In other words, Bitcoin is both the truest reflection of the financial world today and its most dangerous illusion. As for my personal view, at this stage, Bitcoin looks more like a purely speculative product, even a massive bubble. Although it shares some similarities with gold in terms of scarcity, to truly become a widely recognized safe haven asset or an inflation hedge, Bitcoin still has a very long way to go. Right now, it has almost no practical value, and its price depends entirely on speculation and consensus. That is why, as a long-term value investor, I don't trade Bitcoin, and I certainly don't include it in my portfolio. All right, that's it for today's video. What do you think about Bitcoin? Do you see it becoming digital gold in the future, or do you think it will eventually go to zero? Share your thoughts in the comments below. If you found today's content helpful, don't forget to like, subscribe, and share this video with your friends. Your support is my greatest motivation.